Well, switching gears now, Target shares fell more than 6% today. The national retailer reported a quarterly drop in sales and announced a new CEO. Chief Operating Officer and 20-year company veteran Michael Fidelki will take over for CEO Brian Cornell. He won't step down, though, until February, and Cornell will then become the executive chair of the board. The retailer reported a 21% drop in net income in the quarter ending August 2nd. The company also saw a 1.9% dip in sales that come from physical and/or online stores. Target has reported flat or declining sales in this department for 8 out of the past 10 quarters. Ted Rossman joins us now. He's a senior industry analyst for Bankrate, a financial services company. So we saw this dip in the stock, 6%. What does that tell us in terms of how investors are feeling about this decision to change leadership?
Investors are skeptical that the successor is coming from within. Target's had a tough few years. The past 3 years, their sales have steadily declined. There was a feeling that maybe an outsider would be better equipped to lead a turnaround. Target's been facing a tough environment because a lot of people are trading down in terms of cheaper stores, cheaper brands. Target's mix is more discretionary than some of their rivals like Walmart, which is the nation's largest grocer. There's a feeling among some that Target's kind of lost its way, that maybe its merchandise is not as stylish or well-stocked as it used to be.
And how does this compare with other second quarter earnings with other big companies like you mentioned, Walmart?
A big theme is that K-shaped economy. The rich get richer, the poor get poorer. That divide has really never been greater. Moody's says that the top 10% of earners are leading to 50% of spending. That's an all-time high dating back to the late 80s when tracking began. That's a big theme we're seeing. A lot of people with middle and lower incomes are feeling pretty tapped out. Their savings are depleted. They've taken on credit card debt. The overall stats look just fine, but that's mostly because high earners are propping them up.
President Trump has expanded the tariffs, 50% steel and aluminum. We learned about more products. What impact does that have on U.S. Companies and consumers? I mean, you just talked about sort of the lower and the middle class already feeling the pinch. So what do we expect for that group that we're talking about to feel now?
A pleasant surprise so far is that tariffs have not really hit prices as much as we thought they would.
Okay.
A lot of retailers have been holding the line. They're absorbing those increases. That may not last forever. That's important to watch moving forward. The other thing is they're spending down current inventories before replenishing and potentially raising prices when tariffs eventually hit those inventories. So far, so good, but still a lot of uncertainty. That's hitting businesses, it's hitting hiring, it's affecting consumer sentiment, which is depressed. More to come on all that.
Yeah, I say 2025, the word of the year is going to be uncertainty.
Very true.
Ted Rossman, thank you so much.